Welcome to the deep dive. We take stacks of information, complex reports, and basically boil them down to the key insights you need.
Exactly. We do the digging so you get the gold.
And today, we're plunging into the, well, really fascinating and rapidly evolving world of the global mutual fund assets market. It's a
Mm.
sector that's not just growing steadily, it seems like it's on the cusp of a really significant surge.
Yeah, and that has huge implications for how money moves around the globe.
Right.
So, our mission in this deep dive is essentially to give you a shortcut. We want to help you understand the big picture,
Okay.
the key trends, the projections shaping this whole sector, looking out all the way to 2033. And this is all based on a pretty comprehensive market outlook we've studied.
And we're not just talking dry numbers here.
No, definitely not. We want to show you where the real action is happening and maybe highlight some surprising shifts in financial power that are emerging.
And just quickly, when we say mutual funds, we mean those professionally managed investment pools, right? Where lots of
Mm.
people, individuals, institutions put their money together.
That's the one. So understanding where they're headed is really key to understanding global finance overall.
Okay, let's unpack this then. Let's start with the scale, the global picture. Some truly impressive numbers here.
Yeah, lay them on us.
So back in 2021, the global market was around uh, $484 billion.
Okay, substantial.
But here's where it gets exciting. It's projected to climb to over $657 billion by 2025.
Right, quite a jump already.
And then, get this, it's expected to more than double again to a remarkable $1.2 trillion. That's trillion with a T by 2033.
Wow.
That works out to a compound annual growth rate, the CAGR, of almost 8%, 7.93% to be precise, over that whole forecast period.
What's fascinating here, I think, is that this consistent growth, that nearly 8% a year, it isn't just some fleeting trend.
Right.
It really reflects a very strong, sustained investor appetite. People want these diversified, professionally managed options.
And it's global, you said.
Yeah, exactly. That appetite isn't just limited to, say, North America or Europe. It spans across all geographies. It really hints at a global shift in how people are choosing to invest, for growth, but also for stability.
So if the whole world market is expanding like this, where's that growth actually, concentrated? Let's maybe zero in on some key regions.
Good idea. Where should we start?
Let's kick off with North America. It's always been a huge player, right?
Sure.
And it's set to more than double its mutual fund assets. It goes from around $150 billion, $151.59 billion in 2021, to over $355 billion by 2033.
Okay, so still very strong growth.
Yeah, maintaining a solid CGR of over 7%, about 7.37%. Now, within North America, the U.S., unsurprisingly, leads in just sheer volume,
Right.
expected to hit nearly $300 billion, $293.8 billion by 2033. But here's an interesting detail.
Yeah.
While the U.S. have the lion's share, Canada actually shows a slightly stronger annual growth rate. It's clocking in at 8.26%.
Interesting. So growing faster, relatively speaking.
Exactly. Growing from about $13 billion to over $34 billion. And Mexico also shows really robust momentum, set to more than double its assets to around a 7.5% CAGR.
This raises an important question, though, doesn't it? Why might Canada's growth rate be, subtly outpacing the U.S., even though the U.S. market is so much bigger?
Yeah, what could be behind that?
Well, our source doesn't spell out the exact reasons country by country, but often these kinds of nuances can be linked to things like specific regulatory changes, maybe making it easier to invest there,
Oh.
or maybe shifts in how pension funds are allocating money, or even just a different pace of digital adoption in their financial systems. Those things can really create different growth trajectories, even in mature markets like these.
That makes sense.
It-
Okay, let's pivot now. Let's look at Europe, another big established market, also showing strong, consistent growth.
Right, another heavyweight.
Europe's total mutual fund assets are expected to more than double as well, from about $120 billion in 2021 to over $285 billion by 2033. That's an annual growth rate of about 7.5%.
Pretty solid, very comparable to North America overall.
Yeah. And within Europe, the UK is notable, poised for strong growth, around 7.8% CAGR, hitting about $47 billion. But Germany actually leads the pace within Europe. Its market is said to expand at over 8.2%, 8.28% annually, reaching nearly $60 billion by 2033.
So Germany's the Canada of Europe in terms of that slightly faster growth rate.
Huh, maybe. France also shows solid growth, though a bit slower, closer to 7%.
Okay.
And then you see steady expansion across Italy, Russia, Spain. They're all seeing their markets more than double over this period. It really indicates broad-based health in Europe's sector.
Yeah, even if the growth rates vary a bit. Like you mentioned Luxembourg earlier, didn't it have a slightly lower CAGR?
It did, yeah, around 6%. So you definitely see variations within the continent.
Right.
Okay, so North America and Europe.
Impressive, steady growth. But prepare yourself for what's happening in Asia Pacific.
This is where things really take off, I suspect. You got it. This is where the acceleration is, well, truly unparalleled. The Asia-Pacific mutual fund market is absolutely thriving.
Okay, give us the numbers.
It's projected to nearly triple, from around $144 billion in 2021 to almost $400 billion, $391.95 billion by 2033.
Wow, triple.
And that comes with a leading annual growth rate, the highest regional CAGR of over 8.7%.
Okay, that's significant.
Now, China, of course, is a huge part of this story in terms of total volume, expected to hit over $120 billion by 2033, with a strong 8.9% PAGR itself.
Makes sense given the scale of its economy.
But, and this is a big but, what truly captures the attention here is India.
India, okay.
India is set to grow from just over $21 billion in 2021 to nearly $65 billion by 2033, and has the highest growth rate of any major market globally, a blistering 9.53% annually.
9.5%, that's incredible acceleration.
Isn't it? Japan and South Korea also remain really strong contributors, projected to hit about $58 billion and $33 billion respectively by 2033.
Right, established players there too.
And Southeast Asia as a whole. It's set to effectively double its market size in less than a decade, showing an amazing KGR of nearly 9.5% as well.
So if we connect this back to the bigger picture, these incredibly high growth rates in Asia Pacific, particularly India and Southeast Asia, I mean, this signifies a massive shift, doesn't it?
It really feels like it.
A shift in global economic power and investment opportunities. It suggests these regions aren't just, catching up anymore. They're becoming increasingly central to the entire future of global mutual funds.
What's fueling that specifically, do you think?
Well, it's likely a combination of factors mentioned in the drivers, like burgeoning economies, sure, but also a rapidly expanding middle class with more disposable income.
Right.
And often a younger population that's maybe more comfortable with digital finance, embracing these new tools much faster.
It's incredible momentum. Okay, let's move on to South America, another region showing really solid and significant growth.
Okay, what's the picture there?
Mutual fund assets. There are forecast to grow from around $31 billion, $31.48 billion in 2021, to over $81 billion by 2033.
Still more than doubling.
Yep, with a robust annual growth rate over 8.2%. Brazil leads the region in terms of sheer size, set to almost triple its market, hitting nearly $30 billion.
Strong showing from Brazil.
But again, what's particularly striking, look at Argentina. It shows a standout annual growth rate approaching 8.8%. 8.79%.
Another high flyer. So its market will almost triple too.
Exactly. From about $5 billion to over $14 billion. And countries like Colombia, Peru, Chile are also contributing meaningfully, all showing consistent annual growth between roughly 7.7% and 8.5%.
So strong growth across the board there too.
Definitely. Okay, guiding our attention now towards other emerging opportunities. Let's look at the Middle East. Also forecasting significant growth.
Right, how's that shaping up?
Its mutual fund asset revenues are expected to more than double, climbing from about $23 billion in 2021 to over $58 billion by 2033. That's an impressive 8.1% annual growth overall for the region.
Solid. And who are the main players?
Key players driving this seem to be Saudi Arabia, Turkey, and the UAE, all projected to see substantial increases. Saudi hitting maybe $14.8 billion, Turkey $12 billion, UAE over $10 billion by 2033.
Okay.
And here's where it gets interesting again. The UAE specifically stands out. Its annual growth rate is forecast near 8.8%.
8.79% again, like Argentina.
Exactly, making it the fastest growing market in that region.
What's fascinating there is, thinking about the drivers, that specific accelerated growth in certain Middle Eastern nations like the UAE, it could be really strongly linked to those broad economic diversification strategies we hear about.
Moving beyond oil, for instance.
Precisely. Many of these countries are actively trying to move beyond traditional resource economies, and that often involves encouraging foreign investment, developing more sophisticated financial markets, making them more accessible.
So that push benefits mutual funds directly.
Yeah, exactly. More options become available, more people get engaged with structured investments as the economies modernize.
Makes sense. Okay, finally, let's wrap up the regional tour with Africa.
Okay, the African continent.
Now, it's starting from a smaller base, definitely, but the market there is still projected to more than double, from around $14.5 billion in 2021 to over $37 billion by 2033.
Still significant growth.
Yeah, maintaining a steady 7.4% annual growth rate. Nigeria is a key player to watch, set to more than double its market size by 2033, hitting around $6.5 billion. That indicates a lot of untapped potential, perhaps.
Seems likely.
And South Africa continues its role as a regional leader, poised for strong growth, over 8% annually, growing from about $5.4 billion to nearly $15 billion.
Oh, right. So South Africa leading the charge there.
Okay. So what does all this mean? We've toured the globe, seen this widespread, pretty consistent growth everywhere, but then these pockets of really explosive acceleration, especially in Asia-Pacific. What's actually driving this whole phenomenon across such different places?
Yeah, it's a great question. When you synthesize all the data, several big overarching drivers really stand out. They seem to be collectively shaping this global trend.
Like what?
Well, a major one is just the increasing digital adoption in financial services. Think apps, online platforms. Investing is just way more accessible now than it ever was.
For sure. You can do it on your phone.
Exactly. Then another crucial factor, rising middle-class incomes, particularly in developing economies, right? That just creates a whole new massive pool of potential investors who have money to put to work.
That makes sense.
We're also seeing ongoing regulatory modernization in many places. Governments are creating more stable, more attractive environments for investment, both domestic and foreign.
Okay.
And as we just touched on with the Middle East, these national economic diversification strategies are playing a really significant role too. Countries are actively trying to build up their financial sectors.
So it's a mix of technology, demographics, regulation, and national strategy.
Pretty much sums it up. These factors are working together, empowering more individuals, more institutions to access and, hopefully benefit from professionally managed investments like mutual funds.
And connecting this back to you, the listener, why should you care about these trends?
Well, understanding this isn't just about abstract numbers, is it? It's about recognizing this shifting landscape of global wealth and investment. It really informs your own financial perspective, helps you understand how capital is flowing around the world.
And maybe where future opportunities might lie.
Exactly. It gives you that bigger context.
It's definitely clear that mutual fund assets are on a significant and pretty steady upward path across the globe, with some really dynamic regional shifts happening under the surface.
Absolutely. And this raises, I think, an important question for everyone listening to mull over.
Okay.
Considering these really significant growth projections, and especially those regional variations, the explosive rates in places like India and Southeast Asia, what are the broader implications for individual investors like you who might be looking to diversify portfolios globally?
Good question.
And maybe looking even further ahead, what might be the next big innovation in this investment space? Could it actually emerge from these high-growth regions rather than the traditional financial centers? Something to think about.
Definitely something to think about. Thank you for joining us for this deep dive.
The world of finance, it often feels like trying to drink from a fire hose, doesn't it?
It really does. So much information, changing constantly.
Yeah, one minute you're trying to keep up with, I don't know, the latest tech stock, the next, it's the whole global investment picture. Staying well-informed, really well-informed, without just drowning, it can feel, well, impossible. So today we're doing a deep dive into one of the most dynamic areas, the evolving landscape of the mutual fund assets market.
A really core part of the financial system for so many people.
Exactly. And our mission, for this deep dive is to pull out the most important nuggets from the material you've shared with us. We want to give you, the listener, a kind of shortcut to understanding the key drivers, what's holding it back, and the exciting new trends shaping its future.
Yeah, get you up to speed quickly.
Okay, let's unpack this.
What's fascinating here is just how central mutual funds really are. I mean, not just for individual financial plans, but they tie into broader economic trends too.
Right. They're often the first step for people new to investing.
Precisely. And their collective movements, they can signal pretty significant shifts in market direction. What our analysis shows is a market that's seeing some really robust growth, but it's also navigating some, let's say, unique and persistent challenges. So maybe we should start with what's genuinely pushing this market forward.
Yeah, let's do that. That sounds good. One of the most intriguing threads I picked up in the research was this idea of a global increase in financial literacy.
Oh, yes. Fundamental.
It sounds fundamental, but what struck me was how this better understanding is actually moving the needle for mutual funds,
Yeah.
especially in some of the newer markets.
Yeah, it's not just about like knowing the definitions,
Mm-hmm.
it's empowerment.
Empowerment, okay.
We've seen really compelling evidence that when people genuinely grasp concepts like diversification or the power of compounding interest or how to assess risk compared to what they're trying to achieve,
Yeah.
mutual funds suddenly become much more tangible, more attractive as a long-term thing.
So it goes beyond just theory.
Oh, absolutely. We're seeing it translate directly into higher asset inflows. And that's thanks to widespread educational campaigns. You see them from institutions, governments, even those cutting-edge fintech firms. It's really broadening the whole investor base.
And that increased awareness, it often goes hand in hand with another powerful growth engine we identified.
Yeah.
The burgeoning middle class, right?
Yeah.
Especially in developing economies.
Yep, coupled with rising disposable incomes.
It just makes sense, doesn't it? When people earn more than they need for basic living, the natural next step is moving from just saving to actively investing.
Mm-hmm.
But what makes mutual funds especially appealing in, say, semi-urban areas or these emerging financial hubs, according to the data?
Precisely. They offer a really accessible, relatively low-barrier way to get portfolio diversification.
Something that's hard to do on your own.
Incredibly difficult, yeah, or expensive. Our research shows this segment of the population is actively looking for simple but still effective ways to grow their wealth.
And mutual funds hit the bill.
They fit that bill perfectly.
Hmm.
Pooling resources, getting professional management,
Yeah.
it just works for a lot of people.
And you really can't talk about accessibility these days without bringing up digitization.
Oh, absolutely central.
The material we looked at strongly indicates this has played a pivotal role. But it's not just about convenience anymore, is it? How has technology actually reshaped the behavior of investors in this space?
It's been transformative. Seriously, think about it. You've got user-friendly apps, really robust digital platforms, completely paperless onboarding.
Yeah, no more stacks of forms.
Right. And even automated SIPs, systematic investment plans.
That way to invest smaller amounts regularly.
Exactly. It averages out your cost,
Yeah.
helps mitigate trying to time the market perfectly. All of this stuff has just removed so many of the traditional hurdles, the things that used to deter first-time investors.
Makes sense.
And we're seeing it encourage a much wider, more diverse audience to actually explore and commit. Investing shifts from being this intimidating process
Yeah.
to an almost daily accessible habit for some
Mhm.
people.
Okay, so those are some strong tailwinds. But not all market forces are pushing things forward. Despite this momentum, the material definitely highlights several significant obstacles.
Mm-hmm. Reality check time.
Yeah. One obvious one is just market volatility, economic uncertainty. We've seen pretty compelling data showing that during, global downturns or geopolitical unrest, investors tend to pull back, especially from equity-oriented mutual funds.
That's right.
Does the research give any insight into which types of funds are most vulnerable to these pullbacks? Or maybe are there strategies investors use to sort of mitigate that short-term fear?
What the data really reveals is that this kind of reactive behavior, it creates a real challenge for consistent growth, particularly for those actively managed equity funds. They often see the larger outflows.
So people get spooked and sell.
It's a classic investor dilemma, isn't it?
Yeah.
Fear often trumps logic in the short term. Investors frequently flock to what they see as safer havens, like debt funds, or sometimes even just cash.
And then they miss the recovery.
Often, yes. They end up missing out on the eventual recovery.
It's fascinating how much human psychology plays into these massive markets.
Absolutely fundamental.
And speaking of challenges, I found it kind of surprising how low mutual fund penetration still is in many rural and underserved regions.
Yeah, that's a persistent one.
While cities have seen huge uptake, these untapped areas face really unique hurdles. What did the sources point to as the main reasons for this gap, beyond just, limited internet access?
Well, beyond connectivity, which is definitely a factor, the research points to a pretty significant lack of financial education that's actually tailored to their specific needs and context.
Right, not just generic advice.
Exactly. And often there's a deep-seated skepticism towards formal investment channels. Sometimes that's rooted in cultural factors or historical experiences.
Interesting.
So it becomes a fundamental trust and awareness issue. It genuinely slows down broader adoption. It's not just about making a product available online. It's about building understanding and, frankly, rapport.
That makes sense. And then there's a problem that almost sounds like a good problem to have, but isn't always. The sheer overwhelming number of mutual fund options available.
Ah, the paradox of choice.
Right. Our research points straight to that. Having too many options, ironically, seems to paralyze potential investors. How does this tyranny of choice, as some call it, actually act as a barrier,
Sure.
particularly for new investors?
Well, it often funnels new or maybe more conservative investors straight into indecision, or worse, it causes them to just avoid investing altogether.
Just throw their hands up.
Pretty much. The material highlights that without clear expert guidance or, increasingly automated guidance from robo-advisors, many people simply can't navigate the huge array of equity funds, debt funds, hybrid funds, thematic funds.
It's a lot.
It really is, and it becomes a significant barrier to broader market growth, even though, theoretically, more choice should be a good thing.
That's a really significant nuance. Okay, so let's pivot now to the key trends. The things that are genuinely reshaping this industry, maybe even offering solutions to some of those challenges we just discussed.
Good idea. There's a lot happening on that front.
One standout development the source really emphasize is the surge in passive investing. Index funds, ETFs, they're really gaining traction. What's driving this preference, do you think? And how are the asset managers responding?
Well, primarily it seems to be about simplicity and, crucially, lower
The
costs.
fees, yeah.
Exactly.
Mhm.
Investors who are looking for steady, long-term returns, maybe without the burden of high management fees, are increasingly leaning towards these passive
Makes
strategies.
sense.
And asset managers, they're definitely taking notice. They're having to evolve their offerings, trying to strike a new balance between their active and passive approaches. They recognize that both have their place, but that demand for passive options is, well, undeniable right now.
And another really transformative trend our material highlights is the rise of ESG-themed funds.
Yes, environmental, social, and governance. Huge growth area.
It feels like this is more than just a fleeting trend, doesn't it? What did the research indicate about the underlying drivers here? Are investors really willing to, say, sacrifice returns for their values? Or is something else going on?
It looks like a powerful convergence, actually. Investors today, they aren't just looking for financial returns. Increasingly, they're looking for responsible returns.
Okay.
So funds aligned with ESG principles are attracting significant attention from people who want their investments to reflect their personal values. That's
Hmm.
clear. But the data also suggests that many investors see ESG integration as a sign of better risk management.
Ah, interesting angle.
Yeah, and potentially indicating better long-term sustainability for a company, which in turn can also lead to competitive returns. So it's not necessarily an either. Sustainability is becoming a core consideration in how funds are designed, and it's a major draw for new capital.
Got it. And finally, we absolutely can't overlook the profound impact of robo-advisors and AI-powered platforms.
The tech revolution continues.
These smart tools, they feel like they're truly revolutionizing fund selection, maybe tackling that paradox of choice issue we mentioned.
They certainly help with that,
So
yes.
what's the longer term implication here? Are we looking at a future where, human advisors are sidelined?
Yeah.
Or is it more of a symbiotic relationship?
The immediate impact is definitely greater accessibility and personalization. These platforms can offer recommendations tailored to your individual risk profile, your goals, current market trends. It makes investing less intimidating for sure.
Take some guesswork out.
Right. And while they've certainly broadened the investor base, the consensus from on material suggests it's shaping up to be more of that symbiotic relationship you mentioned.
Okay.
AI handles the heavy lifting, the data crunching, the consistent monitoring. And that frees up human advisors to focus on the more complex planning, behavioral coaching, dealing with nuanced client relationships. Things AI really can't replicate.
The human touch.
Exactly. It's enhancing the advisory landscape, not really replacing it. At least that's the picture for now.
So what does this all mean? We've walked through how things like improved financial literacy and expanding global middle class and digitization are really propelling the mutual fund market forward.
Yep, the key growth drivers.
But we've also acknowledged the hurdles. Market volatility is always there. That low penetration in rural areas is a real challenge. And even that overwhelming number of choices can be a barrier.
The restraints.
And finally, we've explored these really transformative trends, the shift towards passive investing, that surging interest in ESG funds, and of course, the rise of AI and robo-advisors. This deep dive, it was really designed to give you a comprehensive but still concise overview, a shortcut, hopefully, to understanding this complex and vital market.
Exactly. It's about getting to the core of what matters. without getting lost in all the noise. And this raises an important question, I think.
Yeah.
Given this continuous evolution of technology and also investor values, like the increasing focus we see on ESG principles, how might that balance between, say, active and passive investing, or between human advisors and AI, continue to shift? Maybe in unforeseen ways for mutual funds in the future,
Good question.
and perhaps more importantly for you, the listener. What does that mean for how you approach your own financial decisions as this whole landscape continues to transform around us? Something to think about.
Mm.
Stay curious and, keep exploring these themes.